Okay, we're actually looking at the USD JPY, right? USD JPY, Japanese yen, US dollar on the H4. Okay, all of us should know now, H4 is 4 hours. Now, one of the things that I wanted to take a look at today, or just to go over a bit, is number one, excuse me guys, the importance of higher time frame check down analysis, and also a bit of technical analysis. Okay, for the past couple of weeks, I think it was last week, okay, we were focusing a lot on two aspects or two elements of the actual strategy itself, and this week we just like to introduce one more. Okay, so this week we're just going to be focusing on one thing when it comes to technical analysis, and that one thing, okay, we're going to start off with it probably in the middle of the session. Okay, so there's just one thing that I just want to get out the way, and hopefully it's going to clear up a lot of questions that some people might have. Okay, now the question is around time frames. Okay, I know there's a few guys who might have gone through that already, but the question of time frames always arises, and a lot of people like to go back to it because obviously it's unclear. Okay? And the simplest way that I can say explain it without sounding monotonous or like I'm saying the same thing over and over again is basically you don't have to look at every single time frame. Okay, your analysis shouldn't and cannot be like, it's impossible for you to think you're going to get the same pieces of information out of every single time frame that you have available. Okay, now just because you have all these time frames available for you to take a look at, it doesn't mean you have to use them or it's a must that you must use them. It's sort of like when you are a let's say a handyman, for example. Okay, what you do is you get, let's say, a piece, let's say some tools, right? You buy a handyman box set or whatever the case may be, which has tools, and then you're going to have your 2 or 3 favorite ones that you use on a continuous basis, on a consistent basis, and then those are the ones that you become proficient in, right? Now, if you try and use every single thing in every single situation, that probably won't work to your advantage, because some jobs, right? So some jobs that you might have at that particular point in time will require you to use I don't know what plumbers use, but let me just say pliers, okay? And if you have the right tools, you don't need the entire toolbox. You need 2 or 3 tools out of the toolbox, and that will obviously save you a lot of time in trying to pick out what you should be using or what you won't be using. So in terms of that analogy between time frames as a proficient trader as well as a plumber with his tools or her tools, whatever the case may be, you have to pick the ones that you're going to be focusing on, right? The ones that you're going to be using specifically for that. Now, the one thing that will determine, obviously, that is the type of trader that you actually are, right? If you're a short-term trader, you will need to use the shorter time frames for you to make a informed trading decision. Now, if you use the higher time frames only for short-term trading, it's going to put you at a disadvantage, because at the end of the day, when it comes to short-term trading, entries are important. Okay, long-term trading, I mean, entries aren't as important. Okay, what's important is obviously the risk management side and you sticking with the position through, let's say, the weeks, the months, or the years that you might hold a position. But now, if you're isolating a small period of time, right, you're going to be in the market today and out of the market today, your lower time frames will play much more of an influential role in your decision making to get into a position as well as to get out of the position. Okay. So what I usually say is, don't forget the big picture. Obviously, right? That doesn't mean just because you're trading the smaller time frames, you completely forget about the larger time frames, the trend on the larger time frame. So, for example, if you have a very aggressive downtrend, you will be more prone to, or you will be, how can I put this? You want to trade in line with the downtrend, for example. Okay, you will want to be a short holder, even though you're going to be taking short or like small amount of pips throughout that entire move. Okay, so you might have a 1,000 pip move, but you might be taking 20 pips there, 30 pips there, 15, 20, 50, 80 pips. Okay, because I believe anything lower than 100 is still sort of like a scalp or short-term position. Okay, there is no exact number to that, right? Like I said, trading is not exactly a science. It's more of an art mixed in with a bit of science, but you don't have any specific rules about, okay, a trend or a scalp is less than 100 pips. And from 100 to 300 pips, that is a swing trade. From 300 to 10,000, that is a position trade. So if you want, you will be primarily looking at shorting during these downward trends on the higher time frames. Even though you're going to be looking at the 15-minute, you might be looking at the 5 minute, you might be looking at the M30, which is the 30-minute. But essentially, your main directional bias will be down, and you will be looking at short positions. Okay. Now, let's just use a trend line. You guys know I'm not a huge trend line fan. Not because there's anything wrong with trend lines. There actually isn't. They can work very effectively if you know how to use them. I just found they never worked for me because I guess I wanted to see stuff. It made me see stuff that wasn't exactly there. Right. So I just like things that are very clear cut. Right here you have 110, which is a round number. There you have a 200 bounce of the moving average. Right. That's something that the oscillator as well as the indicator itself actually plots out on the chart for me, and I just need to do a bit of analysis on my end. But I mean, this is more rule based for me, okay, as opposed to a trend line. A trend line, I can decide that this is where the trend is, okay. I can decide to put the trend line here. I can also decide to put the trend line here, okay. So it does take a bit of experience and a bit of learning, and you also have to sort of like color in between the lines every now and then, because you might have one, let's say you decide to plot the trend line over here, you might have this swing low that doesn't really touch that lower part of the trend line. Okay. And then you have to sort of like fill in the blank and say, okay, I can understand why that didn't touch there, but this trend line obviously is still valid. Okay. Now, as you can see, the market rocket up. Our main pieces of information will come from the higher time frames, let's say the daily as well as the weekly. Okay. So let's just say we prefer to use the daily as well as the 4 hour. Okay. Now, if you use just these two time frames, what you can do, right click, right, and I think you go to customize, right? So you're going through to your customizing tool. And what you do is to avoid you having to look at all these different time frames, because it's like I mentioned earlier, if you have a toolbox, I'd like to use a better example. I mean, it's right at the top of my head, but I just can't put my finger on it. But you have a toolbox as a handyman, for example, and you have all these tools to actually use to choose from. Okay. Sometimes you will feel the urge to use different tools where you don't necessarily need to. Okay, you might use something. I'm terrible with tools. I would think I only know one tool, screwdriver. Yeah. So you might want to use a screwdriver, for example, to, I don't know, for a job that would be better suited for a hammer, for example. Okay. But since it's there, since you have the hammer or the screwdriver there, you're more prone to actually use it. So to avoid all of that, what you can do is right click on the toolbar, okay, and you can just remove all these time frames, right? Let's say you're just going to focus on the daily, the 4 hours, as well as the 1 hour. So that's where your analysis is going to be based on, and you're just going to remove this. Going to remove this one, remove that, and let's say you want to remove the weekly as well, which I don't suggest because it's usually in line with the daily. But then, I mean, as long as you okay, so now you have one, two, three, four. All right, so you have four time frames that are on your chart, and this will sort of like help to remove that urge to drop down to time frames that will conflict with what your idea of where the market is supposed to go, right? So based off your analysis and what you've predetermined as the directional trend, and you will use those three time frames. Okay, so those three time frames will make up your directional bias. Okay, when I say three, I'm just saying the H1 for 4 hour as well as a daily. That's the example that we're using there. Okay, guys are with me. Okay, so now that we have all of those out the way, we can then proceed to doing our regular analysis. Okay, so um, let's say we start on the daily time frame. Okay, let's say we're using trend lines as a means of analysis. Now, this is just an example, guys. I'm not saying just go in and throw trend lines in there because I don't particularly use them myself. Okay, but I know guys who do use them and they use them very effectively. Okay, you just need to know the tools you use and just focus on becoming effective on those particular tools. Don't try and use everything. That will confuse you and lead to undesirable results. So we have our daily and we're looking at what seems to be like an upward trend. Right now we can also use the 200, okay, to believe that this is a 200 moving average. Okay, sometimes I also use the 800 moving average. Now this is the 200 exponential moving average, and what I've always said about the moving averages is that a lot of the time when the moving average is somewhere within the actual price itself, then you have a sideways consolidating market. Okay, if the moving average is firmly above, then you have a downtrend. If the moving average is firmly below, which I'm hoping that we'll get an example of that in a moment. Okay, let's just use this one, right? It's only a couple of months, probably 2 months or so, but it does serve as an example. And then you see this long extended ranging market, and you can see that the moving average was in between, right? So crossing up, it was crossing down, crossing up, and then crossing down. And then as soon as the market starts to trend again, right? As soon as the market starts to trend again, then you can basically see the moving average move away from the price. Okay. So I do hope that I have clarified this part because it does seem like it's a recurring or it's an issue that a lot of guys still have, okay, which is quite understandable. But don't try and confuse yourself too much. Rather do what I just showed you over here, okay? Remove all these other unnecessary, I can say distractions when it comes to your time frames. I do believe you can actually do that with just about anything. Okay, so for example, if you don't need, let's say, channels, right? So if you don't want to be used in the channel or the trend line or the Fibonacci or whatever the case may be, then you can just remove all of that stuff over there as well. Yeah, it just helps you to focus on these 2 or 3 things that you're going to be using. Even so, what you can do is, if you want to firmly stick to the higher time frames, because like I've mentioned before, a lot of guys focusing on the smaller time frames, okay, short-term trading, scalping, would be better off focusing on swing trading and position trading. They would actually improve on their trading results if they focused more on the longer term. Okay. But because we all know that short-term trading, right, scalping presents this sort of idea that we might make more money as scalpers than we would as position or swing traders, which is obviously totally not true if you understand anything about the markets. But I mean, the thought is still there. It's very difficult to get it out of people's heads. Okay. But in any case, I do hope that has clarified things, and everyone just does this from now on. Just anyone who is actually struggling with identifying which time frames they should be using, and just specifically sticking with those time frames instead of venturing out and daydreaming on other time frames and all that other stuff. Okay, now the second part that we'd of this for tonight, as I mentioned, we're going to be just introducing an element that we will be looking at for the next couple of sessions. And that particular element is the daily candle, right? Now, the daily candle is basically representative of price action for one particular day, okay? Now, a lot of times we might see a market drop below a very significant level, let's say at 108 even, right? So this area over here, 108 even, and we might be convinced, right, and believe that the market is going to go down, because if we're looking at our 4-hour time frame, and let me just highlight this area there. Let me insert something, let's say a shape or something like that. Okay, let me insert there, and then boom, on the 4-hour time frame. Okay. Okay. All right. So on the 4-hour, we can see that the market actually did close just below that 10800 zone. Okay. But on the daily time frame, that candle doesn't look as convincing as it would, let's say, on the 4-hour time frame. Okay. Likewise, here at 108.50, right, we have a close, boom, right, not a full body candle. But if we were to go to a 4-hour candle or 4-hour time frame, we'd probably find, you see the market closed below, boom, had a full body candle just below that 108.50 zone, but the market made a pullback to the upside. So the weighting of the closing of the daily candle can help in making better decisions in terms of breakouts, because number one, it teaches you to wait. Okay. Because if the daily candle will close at the same time each and every single day, okay, and if you postpone your decision making to the end of the day, it helps you to stay out of all the messiness and sort of like impulse trading that goes on during the course of the day. Because as much as you might see a trade setup, you might see it, you have to still wait for the end of the day for you to make that trading decision. Okay. Right. I'm on this USDJPY and I'm actually kicking myself right now. I think I had a buy stop just above this 108.50. Sometime, can't quite remember, probably a week or two ago, and just decided to remove it because I thought the market was just going to shift away from 10900. Yeah, but that stuff always happens. So in any case, You actually have to then wait for the candle to develop. Right? You don't want to be in a position where you are making too many decisions during the course of the market. Right? When the candle closes, usually then it's a bit calm. Right? When the daily candle closes, it's a bit calm. So even a strategy developed around the close of the daily candle could be effective. So the entire strategy, for example, you add one particular element and say, right, um, I'm going to take the rules in strategy one and just add one thing to it, that I wait for the daily candle to confirm a rejection, for example, at a price level. Okay, you might sit and watch it. It might be agonizing to sit during the day and look at the market move away from a price level that you determined was the price level where the market was going to hit and move away at. But if that does happen, okay, and you do have the strength, the wherewithal, or you can resist the urge to jump in at that particular time and just wait for the daily candle to close. I mean, then I do believe you are well on your way. Okay. All right, guys. Do you have any questions so far? Okay. No questions. All right, guys. So if you don't have any questions at this moment, right, I will be ending off tonight's session over here. Okay. And tomorrow, for all the guys who missed the first couple of minutes of tonight's session, you can wait for the recording. I'll upload that within the next hour or so, depending on how the Wi-Fi is going to treat me. But it should be within the next hour or so. I'll upload it. Just go through the parts that you missed. Right? If you missed the first part, then you just go through that. If you missed the second part due to connection issues or whatever the case may be, or load shedding, then you can just watch the second part. I will be doing the beginners session tomorrow, right? So the beginners session is a lot less practical, you can say, in a sense, and much more theoretical, because we're sort of like still trying to find our feet when it comes to the terminology, right? And the elements of the FX market in and of itself, right? We're not too focused on the strategy. That's not our concern. Beginner session is much more focused on understanding just the markets in general, theoretically. Yeah. And then obviously the application comes in at a much later stage. So I'll post this, right? You can just go through it. Ensure that you just remind yourself with some of the more previous sessions, right? The reason why I uploaded the sessions and then created playlists is that when sort of like the urge strikes, okay, which should be every single day for at least 30 minutes a day, just go through the playlist, right? If you're still new, go through to the beginners playlist, right? It's clearly labeled over there. There's about 5 or 6 videos that I feel are suitable, right? Could be wrong, but I feel that they are suitable to prepare you for the advanced session, right? And during the advanced session, okay, or the advanced playlist, I've picked out quite a few videos, and I keep adding onto that playlist as I add more things to what we're actually doing. But also, I feel like that is sufficient for you to be able to go out into the market and actually trade and make some profit on a consistent basis, which is definitely the objective. So just, I'm pretty sure everyone understands where they are. Okay. If this sort of stuff what we're talking about today is still a bit confusing, just go through to the YouTube channel, right? It's easy if you just subscribe, right? You just subscribe there and press that notification thing here. There's a notification thing there. I'm not quite certain how it works just as yet, but every time I upload a video there and I send it through to the Telegram channel, you'll get notified of that, and then you can just go on through and watch it. Okay, I'll be putting together a few more playlists. Okay, those are related to fundamental analysis, because I've decided just to split the technical side now and from the fundamental side. So anything that regarding news and economic data and all of that stuff will be in the fundamental playlist, and then the technical, right, will remain in the advanced training session, right? I think it's advanced strategy session. Yeah, it's advanced strategy session, and the fundamental, anything news based, will be coming the fundamental strategy session. Okay. I'm hoping that's gonna make sense for you guys. Okay, but I'll send through the relevant links in a moment. And as I said, we've recently reopened, obviously, Signals now. So if you have an account, right, you can just let me know. I'll send through the link after I've uploaded this particular video for tonight. Okay, so I think I'll be posting a bit more in terms of chart analysis. Okay, probably once or twice. Right, I'll do my best to upload a bit more, guys. It's just that it's very difficult for me to find the time, because obviously with the Telegram, I don't trade from my phone, so I have to get on my PC and do the markups there and then send through the stuff onto the Telegram channel. So when I'm not around and I'm just carrying my phone, I can't particularly do that, okay, immediately. That's why sometimes I have to send something in the evening that was happening during the morning. You get me? So it's not that there's any particular reason behind it, except for the one that I'm not around my training station at that particular time, and then as soon as I get there, then I'm able to share all the stuff that I can at that point in time. Okay. So trust everyone had a great time today, right? I will be doing tomorrow's session at 7 p.m. We'll be going a bit longer, right, than usual. Right? I've got something special in the second part of tomorrow's session. We'll probably be going about an hour or so. So make sure you have your supper and stuff like that before we start the session. Get yourself some water, something to write with, and yeah, probably an energy drink or two, because we're going to be going for 1 hour, 7 p.m. to 8 p.m. And we're going to be covering a lot of stuff. Tomorrow is going to be more of a question and answer session as well. So if you have any questions, pressing ones that you feel like you are too shy to shout out during the course of the session, what you can do, you can send them through to me via Telegram. Okay. And in the second part of tomorrow's session, I'll just rattle off all the questions that I've got. And if they do need like live examples on charts and stuff like that, I'll make sure to prepare them in time. But as long as you send them through to me tonight, right? If you can send it through to me tonight, the question, it would be awesome, because it's going to give me some time to just prepare for tomorrow. But if you send them through to me 10 minutes before the session, obviously I can't do anything about it. So send me your questions that you have for tomorrow, and yeah, let's make it a great session for tomorrow. Okay. Thank you very much for coming through, guys, and I'll see you guys tomorrow. Cheers.